Hello, I am Roopa PC, Assistant Professor in Commerce, Sri Shankaranand Singh Government First Grade College, Hospete. This is the 8th session of Unit or Output Costing of BCom 5th semester Cost Accounting paper. Today we will discuss a 15-mark problem of a cost sheet. So let us read the problem. From the following details extracted from the trial balance of New Era Limited for the financial year ending 31st March 2010, you are required to prepare a statement of cost showing various elements of cost in detail. So they have given a trial balance and we will solve the problem through this trial balance. Okay, credit balances: sales 8 lakh, returns of material 10,000, sale of scrap of raw material 8,000. Sales, it is required for the cost sheet, that is sales revenue. At the end we have to take the sales revenue to find out the profit balance. Return of materials means return of raw material, and it should be taken for the consideration of the raw material consumed. Next, sale of scrap of raw material. So this is also have to be taken for the calculation of the raw material consumed. Next, debit balances: opening stock raw material 30,000. So this is for the raw material consumed. And work in progress, that is opening stock of work in progress 40,000. Finished goods 60,000. Plant and machinery, it's an asset. It has been given for the calculation of depreciation. So 1 lakh. Buildings 8 lakhs. Return inwards, so 20,000. Return inwards, here it is. So return inwards means sales returns. So sales we have 8 lakh and return inwards means 20,000 sales returns. So sales revenue will be 8 lakh minus 20,000, that is 7 lakh. 80,000 is the actual sales revenue. We will calculate that later. Raw material purchase 2 lakhs. This is for the calculation of material consumed. Carriage on raw material, this is also for the calculation of material consumed. Next, direct wages should be taken in the prime cost 1,20,000. And then indirect wages. So indirect wages are the factory overheads 40,000 should be taken under the head factory overheads. Factory expenses, these are also taken for the factory overhead 30,000. Sundry office expenses, these are the administrative expenses 83,000 should be taken under the head administration overheads. Power, this is a factory overhead 50,000. And then indirect materials in factory, this is also a factory overhead 10,000. Next, sundry factory expenses, this is also a factory overhead expense. Selling expense should be taken under selling and distribution overheads. Distribution expense, this is taken under selling and distribution overhead. Interest on bank loan. So interest on bank loan, it's a non-cost item. It should not be taken in the cost sheet. Next, additional information: closing stock raw material should be taken under the raw material consumed calculation. That is 40,000. WIP means work in progress, should be taken for the calculation of works cost 25,000. Next, finished goods closing stock should be taken after the cost of production for the calculation of cost of goods sold 50,000. So next, depreciation on plant and machinery at 10% per annum. So they have given the plant and machinery value. We have to take the depreciation on that 10%. So plant and machinery are used for the production of goods, so they should be depreciated, and 10% is the depreciation rate, and it should be taken under the head factory overhead. So next, depreciation on building. So buildings, we have building of 8 lakh. So under that, depreciation on buildings were 8 lakhs. So 50% factory and 50% office. So depreciation rate is 5%. So 5% on 8 lakh, that is equal to 40,000. So that should be taken for factory 50% and for office 50%. Okay, now we will solve the problem. First we will calculate in note we will calculate the depreciation. So depreciation on plant and machinery, that is on 1 lakh 10%, that is rupees 10,000, and this is depreciation on plant and machinery should be taken under the head factory overheads. So next, calculation of depreciation on buildings. So 8 lakhs is the buildings value. On that 5%, that is equal to 40,000. So they say that 50% is for factory and 50% is for office. So 40,000 into 50%, that is equal to 20,000 for factory cost, factory overhead, and then 50% of 40,000, that is 20,000 for office overhead. Next we will solve the problem. So we have only 3 columns here. There is no need to write a column for unit because there are no number of units given. So New Era Limited is the company name, statement of cost. Next we will write down the particulars, and then one inner column will be taken. So for because the details of the overheads and expenses are given, and next is the total column. So first we will take the prime cost expenses, that is direct cost expenses. First one is raw material consumed. So for raw material consumed, we have to take all the necessary information about the raw materials. So first we will take the opening stock. Opening stock is 30,000. For that we have to add the purchases and carriage on material. So all the expenses on material should be taken under the head raw material, that is we have to add them. So 2 lakhs is the purchase and 10,000 is the carriage on material. So for the opening stock of 30,000 we have to add 2 lakhs plus 10,000. So it will be 2,40,000 total, and from that we have to deduct the return of total of 2,40,000. We have to deduct all these. First one is return of material. So return of materials means, so we have purchased some material and we do not need them anymore and we have to return them. So it should be deducted. So 10,000 is the return of material, raw material, and the sale of scrap of raw material. Here scrap of raw material is given. If they have given scrap, we have to deduct them from the factory overheads. So they have given the sale of scrap of raw material, so we will deduct from the raw materials only 8,000, and closing stock of raw material 40,000. So total it will be 10,000 plus 8,000 plus 40,000. So 58,000 is the amount to be deducted from the total material amount. So 2,40,000 minus 58,000 will be 1,82,000. So this is the amount of raw material, value of raw material consumed. So 1,82,000. So next we will write down the direct wages. So direct wages are 1,20,000. So there is no information about the direct expenses. So these two, raw material consumed and direct wages, will constitute the prime cost, that is 1,82,000 plus 1,20,000 equal to 3,02,000. Next we will continue. Prime cost we got 3,02,000. So to this prime cost we have to add the factory overheads. So let us see what are the factory overheads given in the problem. Yes. So on the debit side, debit balance, opening stock, in opening stock we have raw material, work in progress, finished goods. So next we have plant and machinery, that is an asset. On that depreciation we have to calculate. We have calculated in the notes, and depreciation on building also we have calculated. Return inwards we will take up in the sales, and raw material purchased, that is already been taken. Carriage on raw materials is also taken. So direct wages also taken. Indirect wages is a factory overhead, so that should be taken for under the head factory overheads. So factory expenses is also a factory overhead. Sundry office expense is an administrative overhead, that should not be taken under this head. Power is a factory overhead. Indirect materials in factory, that is also a factory overhead. Sundry factory expenses, this is also a factory overhead. Selling expense, this is a selling and distribution overhead. Distribution expense, this is a distribution, that is selling and distribution overhead. Interest on bank loan, so this is a non-cost item, it should not be taken in the cost sheet. Next, in the closing stock, they should not be taken under the overheads. Next, depreciation we have calculated here. Okay, depreciation on plant and machinery 10,000 should be taken under the head factory overhead. And then depreciation on buildings, so 50% of 40,000, that is 20,000 should be taken under the head factory overheads. So here depreciation on plant and machinery, depreciation on buildings 20,000, and then indirect wages, factory expenses, and then power, indirect materials in factory, sundry office expenses, and then here, so here there are no factory overhead expenses. So these are all the factory overheads. So okay, indirect wages, factory expenses, power, indirect materials in factory, sundry factory expenses. Okay, depreciation on plant and machinery we have calculated in note 1, that is 10,000. So that is 10% on 1 lakh, and then depreciation on building 40,000 on 8 lakh 5%, that is equal to 40,000. In that 40,000 50%, that is equal to 20,000 for factory overheads. Okay, note 1 and note 2. So total it is 1,80,000. So 1,80,000 is the factory overhead. If there are scrap of materials, scrap of the goods, so that should be deducted from this 1,80,000. So there is a scrap of raw material that we have already taken under the head materials consumed. So okay, here we have 1,80,000 of factory overheads. We have to add this to the prime cost. So 3,02,000 is the prime cost, and then we have factory overheads of rupees 1,80,000. Total we have 4,82,000. So to this we have to make adjustments of work in progress. So before considering it as a works cost, we have to adjust the work in progress. So total it is 4,82,000. So for this we have to add the opening stock of work in progress. So opening stock of work in progress we have given here is work in progress 40,000, opening work in progress 40,000, and then closing work in progress 25,000. So we have to adjust here only. So opening stock of work in progress 40,000, we have added 4,82,000 plus 40,000, that is equal to 5,22,000. From that we have to deduct the closing stock of work in progress 25,000. So works cost will be 4,97,000. So 4,97,000 is the works cost arrived after adjusting the opening and closing stock of work in progress. So to this we have to add the office overheads. So what are the office overheads given in this problem? Let us see. Okay, so in this slide we have no office overheads. Okay, so in this, okay, so indirect wages, factory overhead it is, factory expense, factory overhead, sundry office expense 83,000, it is a administrative overhead athwa office overheads. Next, and then direct materials, power. Okay, depreciation on building. So depreciation on building 50% of office, so they have given. So calculation of depreciation on building, so 5% on 8 lakh, that is 40,000. So in that 40,000 50% is office. So only we have two office overheads. One is sundry office expense, another is depreciation on buildings 50% of 40,000. Sundry office expense 83,000, and then depreciation on buildings, that is given in note 2, 20,000. So total it is 1,03,000. So to works cost we have to add this office overheads 1,03,000, we will get 6 lakhs. So this is called cost of production. So to this cost of production, we have to make adjustments of opening and closing finished stocks. So cost of production, that is 6 lakhs, we have to add the opening stock of finished goods and deduct the closing stock of finished goods. So let us see. So what is the amount? Opening stock of finished goods 60,000 and then closing stock of finished goods 50,000. So we have to make adjustments before arriving at the cost of goods sold. So 6 lakhs plus 60,000 opening stock of finished goods will be 6 lakhs 60,000. From this we have to deduct the closing stock of value of closing stock of finished goods. So 50,000. So 6 lakh 60,000 minus 50,000 equal to 6 lakh 10,000, that is equal to cost of goods sold. To this we have to add the selling and distribution overhead. So what are the selling and distribution overhead given this in problem? Selling and distribution overheads. So in this slide, no selling and distribution overheads. Okay. Yes, we have only two selling and distribution overheads. Selling expenses 60,000 and distribution expenses 20,000. So both are to be taken under the head selling and distribution overhead. Okay, selling sundry office expenses. Selling expenses 60,000, distribution expenses 20,000. So total selling and distribution overheads will be 80,000. So to the cost of goods sold, we have to add the selling and distribution overheads 80,000. So we will get total cost of rupees 6,90,000. So 6,90,000 is the total cost or cost of sales. So to this we have to add the profit if the profit percentage is given. If they have given the sales revenue, we have to first take the sales revenue and we have to balance the figure to get the profit. So they have given the sales revenue, the first slide of the problem. Sales is 8 lakhs and return inwards is 20,000. So return inwards is nothing but sales returns. So we have to deduct these sales returns from the total sales to get the net sales revenue. 8 lakhs minus 20,000, that is equal to 7,80,000 is the actual sales revenue. See here. So sales revenue is 8 lakh minus 20,000. So sales minus sales returns inwards. So that is equal to 7,80,000 we have to take first and we have to balance the figure. So 7,80,000 minus 6,90,000 will be 90,000. So 90,000 balance is the profit of the period for this company. Thank you.